What's up guys, welcome back to InvestingPH. So I wasn't able to upload any videos last month as I got sick and it took a while for me to recover. Now I'm back and let's keep the videos rolling. Now just a quick recap of what happened for the past 2 months. Earlier in April, the market had a rough time. The PSCI dropped to as low as 5,800 after tariff announcements triggered a wave of fear among investors, but by the end of the month, it managed to recover and climb past 6,200. And we can see the market stagnating around 6,300 to 6,500 in May after news of tariffs being paused. Now, about that 5,800 level, it's the lowest we've seen the index hit in the past 3 years. The drop was driven by tariff-related news and China's retaliatory stance against the US, which could potentially ignite another trade war. Tensions like this tend to raise the cost of goods and shake investor confidence. When this kind of news breaks, panic selling usually follows, and that's exactly what caused a sudden dip. Interestingly, some analysts believe these developments could actually benefit the Philippines in the long run. Yes, 20% of our exports go to the US, but the real safety net is our strong domestic consumption, which can act as a buffer. Also, Philippine tariffs sit at just 17%, lower than the ASEAN average of 27%, making us a more attractive option for businesses looking to relocate and avoid higher tariffs. In short, despite the chaos, the Philippines might actually be in a favorable position, especially given our close ties with the US. But again, for me, this is just another day in the life of an investor. Over the past 5 years, I've seen this pattern repeat. Bad news hits, the market drops, and eventually, it recovers after hearing some good news. Nothing new. Tariffs, no tariffs, or paused tariffs, we have no control over that. That's what I always say. The government, the market, international events, the reaction of other investors, they are out of our control, and they shouldn't be our focus. No one can predict when these things will happen. That's why I focus on the companies I invest in, whether they are affected or not. I stick to my strategy, buy strong companies that can weather uncertainty, offer consistent dividends, and are trading at a good price. That's it. Stop there. No amount of critical thinking or analysis can predict what's coming or where the market is headed next. Every time the market drops, I see the same questions in chat groups. Should I sell now? Should I wait for the market to stabilize? Will the Philippine market recover? No one can answer those for you. No one can see the future. What is in your control is which companies you choose to put in your portfolio. When the market dropped to 5,800, I was buying more. If the market rises, I still buy undervalued stocks. When the market is stagnant, I continue to invest as long as it's within my buy price. I also reassess some companies that announce their new earnings, recompute my buy prices, and kept going. I'm not saying it's useless to follow the news. It's good to be aware, but it shouldn't control your emotions or dictate your investing decisions. Learn to understand what's going on without letting it shake your discipline. That's why my strategy doesn't change, no matter what's happening. Yes, I reassess and recompute my buy prices, but that's based on how companies perform, especially during tough times. Most of the companies I hold have posted stronger earnings compared to last year. Costco posted better earnings compared to Q1 last year. Pure Gold followed the same trend as its parent company. DNL is up 10%, boosted by a 68% increase in exports. AUB's first quarter earnings surged 34%. FGen's net income rose by 4.4%. Megaworld's Q1 income increased by 16%. FLI's net earnings are up 11%. Now these two real estate companies' stock prices are still way down, but earnings are now recovering and continuously giving out good dividends. Now for Robinsons Retail Holdings, reported an 85% drop in net income. This was due to a one-time gain last year from the BPI Robinsons Bank merger. If you look closely, net sales still grew by 4.2% and gross profit increased by 6.2%, so fundamentally, they are in a good spot. With that, my portfolios climbed to a new high of 4,024,700 from my invested capital of 3,091,499, giving me a gain of 30.19% last April. But for May, stocks went back down again, especially my largest holding, Globe, so my portfolio went down to 4,005,843 from my invested capital of 3,111,099, giving a 29.17% return. This marks another milestone for my portfolio as it reached 4 million pesos. Out of that, 525,213 came from dividends. By the way, I just have to mention this. The latest update that DRAGONFI did to their platform, It now supports multiple portfolios, so if you're doing trading, long-term investing, dividend investing, or saving up for a car, well, you can now separate it with this new function, and this multiple portfolio will pave way for the upcoming pair account feature as well. There are also portfolio snapshots, which are a great way to share your progress with your friends or share it on social media. They also updated their research panel, showing all the stocks they've researched and their respective buy prices. I am just amazed at how DRAGONFI rolls more and more features to their app. In a single year, the updates they've done are amazing. So if you're looking for a broker, I can definitely recommend DRAGONFI. Just try it. If you're using other platforms, you would feel the difference. Use my link below to sign up, and both of us can get up to 1,500 depending on your initial funding. Now going back, if you're wondering why my total dividends suddenly jumped compared to last month, turns out I forgot to include 2025 in my dividend tracking formula. That's why my total dividends haven't changed ever since this year. So yeah, that's fixed now. Meanwhile, FMETF's return from the day I started investing is at negative 13.96%. The reason this comparison matters is because FMETF includes dividend reinvestment as well. That's why it's a better benchmark than the raw PSCI index. My portfolio's annualized return is 9.4%. This is the metric I like to track the most. The compounded return formula accounts for every monthly contribution you make and the time you put it in. So, if you're adding every month to your portfolio, it takes into account how long your money is invested as well for each of those monthly add-ons. Of course, this requires tracking your capital and portfolio value every month. I got lucky. I found this tracker early on in my journey, and it's helped a lot. It matches closely with Simply Wall Street's legacy portfolio tracker. There, my annualized return is 9.22%. The slight difference is caused by the lag in the update of the portfolio value, but usually it's about the same. The legacy portfolio is accurate since it tracks each stock I bought and when I bought it, but it's more tedious to input, so I'll leave the simpler tracker link in the description below. Now for the dividends, just like I said last 2 months, after April, my latest 12-month income officially beats last year's. It's now at $16,559 per month. In April alone, I received $31,000 in dividends, my highest so far this year. For May, I received 24,247 pesos, which increases further my latest 12-month income to 17,280 in a month. I couldn't be happier with the dividends I received. As I mentioned earlier, I got sick last month, and in my work as a dentist, no work means no pay. But even though I was at home, I was still getting notifications from DRAGONFI that I got dividends, and it was so comforting, knowing I'm still earning while resting and recovering. That's why it really is my goal to be able to retire off of dividends, to be free from worry that even when I can't work, I would still be earning money that is enough for me to enjoy my life while still having some left to reinvest back into my portfolio to continue growing even more. That is my end goal, and I'm seeing progress. For the last 2 months, my main buys were PLDT, Globe, and AP. It's been a while since I added to Globe, but when it dropped below 2,000 pesos, I couldn't pass it up. My smaller buys were Megaworld, C-REIT, Metrobank, Pure Gold, and Security Bank, most of them yielding over 4% in dividends. I also copied the investment of DRAGONFI's Dividend Harvest portfolio buying OGP. I only invested a small amount buying 500 shares. As you know, the Dividend Harvest portfolio has had outstanding returns. Now for my portfolio allocation, LTG holds the largest position. AUB jumped to second place after its price went up following the earnings release. Globe is now third, after holding the top spot in my portfolio for years. MBT is fourth, followed by Costco, DNL, MREIT, AP, and FGen after its stock price went up after the news of selling its 60% stake in its gas business to Prime Infra. These past months really shuffled the top rankings in my portfolio. Now, do I plan to sell AUB as it has risen a lot lately? Not really. I'm earning an 8% yield based on my cost, and I don't see any new stock right now that offers the same yield and quality. The dividends I receive and my monthly contributions are enough to fund other buys, and AUB has been growing so much, catching up to its stock price increase, so I'm planning to just hold it. Right now, my goal remains the same, just invest and reinvest everything into undervalued stocks in my portfolio. If I find a good company to invest, then that's the time I may think of selling or top slicing some of the companies that have given me huge returns. But as of now, I have yet to find such a company. With that, that's it for this monthly update. Again, if you want to see all the buy prices of the stocks in my portfolio, then sign up to DRAGONFI. It's all there. Thank you for watching and see you in the next video.